but also how to enable the market to come through investment. And my question to you, Radna. Radna, first of all, she's one of the global thought leaders, and she's advising governments and businesses and otherwise. She's the chair of the Red Sea development in Saudi Arabia, one of the largest in the world. So it's great having you here.
It's a pleasure to be here.
Thank you. Last we were together in Jamaica a couple months ago, February, and Christian was there too. So that was fun. We're looking at global resilience at the time. And this is a very resilient destination. We spoke about, I think Laura and Tim spoke about the comeback of European tourism to pre-COVID levels. And Tim was telling us that we even beat pre-COVID expectations in terms of coming back. So that's in terms of people returning to the destination. But we need to look at investment. Often we look at tourism-dependent destinations. Tourism investments drive foreign direct investment, like the main source. And with global capital moving and looking for a place to reside, countries compete for those availability of funds. And we're seeing more and more countries right now investing in tourism. They're recognizing the power of tourism. Kind of tourism used to kind of happen for countries, and now we're seeing countries determined after capturing tourism. And for some of us that may have forgotten, tourism is the third largest industry in the world. And pre-COVID, 2 out of 5 new jobs created worldwide were in travel and tourism. It's astonishing. And 1 in 11 people worldwide work in travel and tourism and supported by it. So it's a significant industry. And in some nations, tourism contributes to GDP as high as 70% in the Caribbean, and of course less in other areas. But when we're looking for investment, we're competing with the world. What does a destination need to do to grab investors? It's a kind of a big fluffy question, but what are the main pillars of success, let's say, in investment attraction?
I'll probably start by saying what a destination shouldn't do. And this is going to be controversial. Let's shake things up at the outset, right? Make it fun. What we should not do, and I'm going to be representing Bosnia and Herzegovina because I've been here 3 days. It's my second visit. I'm living, breathing, and loving the country, as you can tell. We can't go out into the market and say, we have a complex political climate. We have a decentralized government, and we have lots of issues which emerging and frontier markets have, but we are really looking for FDI and investment. So what I'm saying is, do we have these problems? Yes, we do. But my point is, show me another country which doesn't have this problem in the developing or frontier market. And I'm saying, let's flip the narrative and say what is really making Bosnia and Herzegovina special as an attractive investment destination and pitch that story. Look, I've always believed there is no shortage of capital in the world. The world is flushed with resources. What a destination or a country like Bosnia and Herzegovina need as an emerging market is capital, which is long-term and patient, but with a low cost of interest. So in the US, the interest rates are now 4%. The same thing in sub-Saharan Africa is 25%. That is the difference because the risk profile is completely different, right? So we need long-term capital at low cost, which is patient, and we have to pitch what are really the most amazing things which make Bosnia and Herzegovina a special destination. And in my mind, there are 3 key things. Number 1, if you look at all the geopolitical tensions that are happening in the world, be it the war, be it the COVID and everything, one of the key emerging trends out of this crisis is we have seen a trend of localization of supply chains. You can call it friendshoring, you can call it onshoring, you can call it reshoring. The whole world is realigning itself on aligned country blocks. And we are seeing the exact same trend in FDI and investment. And Bosnia and Herzegovina has the most strategic location because guess what? You can get investment or have access to capital anywhere from Western Europe to Turkey to the Balkans. So use that location and strategic location advantage, number 1. Number 2, if you are pitching for investment, of course, you will be talking about the natural beauty, the resources, the culture and everything. But there is one thing we don't speak enough of in Bosnia and Herzegovina, and that is the highly skilled, hardworking talent pool. If you're a country today in Western Europe, and I'm going to get into trouble by saying this, you cannot find talent. You cannot find hardworking, highly skilled talent that is willing to work shifts, that is willing to come to work in short notice, that is willing to be attracted and retained. And Bosnia has that in plenty. So let's start pitching our talent, which we have in plenty. The third and final thing, I say this, and I say this as an investor, as a businesswoman, bullshit talks and money walks. Businesses need incentives. Investors need incentives. So incentivize them, right? Cut down the red tape, cut down the bureaucracy, make things simple. And if you think you're having a hard time in Bosnia and Herzegovina, let me tell you, absolutely not true. I work in 75 different countries, and I can name you countries where you need to get a permit for each floor of hotel construction. So welcome to the world of complexity, right? And at the end of the day, if there's an investor listening in, listen, guys, Western Europe is an old lady. She ain't dating anymore. So if you're looking for double-digit growth, if you're looking for really cool investments and a pool of really high-skilled, hardworking labor, come to Bosnia and Herzegovina.
Wonderful. This is amazing. I should have done this, I should have brought you first, because I would have learned that using profanity gets me people to clap, so. Maybe it's, there you go. Wonderful. There's a big debate here in Bosnia and Herzegovina, by the way, on this, one of the issues you spoke about, which is availability of workforce. Good, hard-working, trained workforce, because many of the employers with us here today, they come and complain, we don't have them. Not because they don't exist, but because they're stolen by our neighbors. They go to Croatia, they go to Slovenia, and otherwise. And I suppose, because they do exist, and they're good, they go there. But the only way to keep them here is maybe more investment. Because if you give them an opportunity here, they wouldn't leave their family and go travel elsewhere and work hard and you know, trying to ship their money back and so forth. But what does it take to bring the new investment? Maybe Christian, you run an organization that's focused globally on sustainability and sustainable investment. And if we're looking at new trends, because also capital has an appetite, and we're seeing more and more in terms of impact capital and sustainable capital. And so money is not just green anymore in the sense of the old use of the term. Now it's green in terms of they're looking for sustainable investments and impact investments and otherwise. What does a destination like Bosnia and Herzegovina need to do in order to succeed in attracting this sort of capital?
I want to use my former position in Atout France to answer this question. Because,
and feel free to use a bit of profanity as well. Yeah.
Because before answering such a question, we have to define what is a destination. And I often use a metaphor to explain. A destination is for a territory what a mine is for a mineral deposit. So you need, the difference comes from the equipment, infrastructure, business models, operators. And that's exactly what an investor wants. He wants the answer to this. And some years ago, I was explaining to the World Heritage Association in France. There is an association of the World Heritage sites. And was asking, well, have we enough to be labelized by UNESCO? And I'm afraid it wasn't enough. And I was quite disappointed whether you have only an estimated beauty in your basket. It's not enough to have a destination. So without infrastructures, no investors. And I'm going to explain why sustainability is coming from that as also. Roads, railways, airports, that's basic. But what about electricity, water adduction, water waste treatment, sanitation? These are the basic of a destination, in fact. We had a mission in Algeria with Ato France years ago, and we stopped. Why? Because the wastewater was directly poured in the sea, and with that, nothing. So the basic are, what are we providing to the territory first? In addition, the total needs must be taken into account. For instance, we have in the south of France a big seaside resort called the La Grande Motte. It's in Occitania, it's in the south of France and on the Mediterranean Sea. And the size of the city is 10,000 inhabitants. It's an average one. In August, it's 100,000. So the size of all these equipments is the one for a 100,000 city. And without that, it's not sustainable at all, because you cannot cope with the amount of things you have to deal with. So, but I think it's not enough, because you need to find the trustful operators, and you mentioned the people, the skills, and everything must be sustainably related as well. The skills, you can be very good in the relationship, but what about having the means to change the behaviors of the customers? So the employees are one of the answer to sustainability, because the behaviors of the customers are mostly one of the leverage of the sustainability issues.
Yeah.
And there are other things to do, because at the end, you also need, and you have mentioned, a united view of the public sector. I am myself elected as a town and territory councillor in the south of France, in the Pyrenees. And we have problems to get investors. Why? It's not a problem of attractivity. We have 4 ski resorts representing 1.3 million daily ski passes. That's a lot. It's the average amount of one of the biggest ski resorts in the Alps, in the French Alps. And what is the concern of investors? Of course, the lack of snow, of natural snow. So we had to develop a lot of things to develop attractivity in the other period of the year. And we first of all,
a year-round destination.
Yes, because of course we had 70% of revenue from the ski,
But
2 months,
right,
and
and
it wasn't enough. But
sure
I can go back any further on that, because we have a lot of leverage to accompany this new way of thinking. Yeah. And by the way, it's the best way to implement a sustainable offer.
It's an interesting example. How do you make a ski resort work year-round? And we're seeing lots of work on this in a number of countries where a ski resort becomes a summer attraction. Yeah. There's no snow, of course, but you go in the summer because it's cooler and you can do it on a hike, and otherwise you extend the season, you make more money and that sort of thing. But Shaji, let's talk about a destination and investment. At the end of the day, investors, as good-hearted as they may be, and sustainable, conscious they may be, it's about making money.
Yep.
Not just investors, but a destination that is run as a company or as a business looks at its bottom line. As a destination, we need to make money. Bosnia and Herzegovina, we need to look at how much foreign exchange we're generating, how much contribution to gross domestic product we're earning, how much contribution to the treasury in terms of tax capture were earning, how many people less on the payroll of the unemployment agency there are, so you could save money, and how many of them are gainfully employed, so you can improve their own selves and their lives and the community and otherwise. So we need to look at the destination as a business, but we need to look at the businesses as single profit units, that we increase their return on investment. Shaji comes from many years at the Hyatt, and he's worked in tourism transport. He's with a company right now that runs over 30 properties, hotels and otherwise, accommodations, and they do also consulting. But he also comes from the tourist board background, so it's a nice, I'm not sure if there's anything else left for you.
Put my finger in many pies.
Yeah, but bringing this holistic approach to destination development. I worked with Shaji in the UAE, by the way. At the time, he was a client, and now he's a contributor. So we flipped things around. But I really liked your approach then, because you looked at the destination as a profit unit. Yep. And my big question that we could share with the participants today is, how do we increase return on an investment for a destination? What is the formula?
Yep. So I'm going to digress a little so that I bring relatability to Bosnia and Herzegovina. In my previous life, I used to lead destination tourism development for Ras Al Khaimah. I don't know if the audience is familiar. Ras Al Khaimah is one of the 7 emirates of United Arab Emirates. It used to be called the extension of Dubai. So when Dubai was extremely popular as a destination, it used to be sold as an extension or the beach side of Dubai when Dubai gets sold out. Now, 2016 is when I became a part of tourism development for Ras Al Khaimah, and then to answer that question, starting from now, demand for the destination creates investment opportunities. So I always say that it's a little bit of a chicken and the egg story. So you start looking at how do we create demand, and for that you need a critical mass of investment. Ras Al Khaimah, we had 2 government bodies. The public sector had 2 arms which invested in hotel and hospitality assets. So that became the starting point for creating demand for the destination. And then the tourism board started visiting. So let me give you the premise. In 2016, 70% of the visitation was domestic, 30% was international. Length of stay was about 1.6. Contribution to the Emirates GDP was about 2%. The largest contributor was industry at 33%. Real estate was at about 10%. So that was the premise. And then we said our aspiration is to grow short-term to 4% contribution to GDP, which became, translated into numbers, 1 million visitors in 2018. Now, this is where Ibrahim was alluding to. We looked at it as business. Destination became a business organization which said, if we take it on a short term to 1 million visitors, we increase brand cachet, brand equity, and that indirectly brings in investment. What I missed to tell you is when we had 70% domestic visitation, we had 7 hotels which were branded, predominantly Hilton, because it was, again, the public sector investment and public sector invited Hilton to participate. Now, fast forward, we did 1.072 million in 2018, short term, and the long term was 2025, 3 million. Now, today, you name the brand of hotel. We've got the Ritz-Carlton Reserve. We've got Anantara coming there. We've got Rotana. We've got IHG. So we've got multiple properties, and interesting, what started off as public sector investment today has private sector participation. And that's naturally gone because the brand cachet increased. So we worked on 2 things. Both Laura and Tim talked about global insights. We worked on insights locally. Now, what was our objective? We said 70% was domestic visitation giving 1.6 length of stay. We wanted to flip that. We said we want to increase length of stay. We also had seasonality. Now, how do we address seasonality and length of stay? So we wanted to know who is our audience. What do we serve them? How do we relate to their consumption? And that's when we realized that we could bring in Western Europe for a longer length of stay because the primary purpose of visit was sun and sands. Now, when we looked at sun and sands, 60% of our audience from Europe fit into that bill. Then we dissect into demographic and say, who travels during summer? Yesterday we were joking amongst us as panelists that in Dubai and Ras Al Khaimah in August and September, we have humidity at about 85 to 90% and a temperature of about 40 degrees Celsius. Now, do people really want to go to the beach then? Now, we tried identifying who could be an audience, and interestingly, we found an audience who would travel during that period, and that was Eastern Europe. So we said there is no connectivity. We brought in charters. We had 5 flights from Poland, 3 flights from Czech Republic every week, and we addressed seasonality. So now go back, 2016, occupancy 41%, 70% domestic, 30% international. 2018, 68% international, 74% occupancy. Why wouldn't you invest? So private sector now, unfortunately, in hospitality, they are all not from the hospitality business. So when I get a private investor to build a hotel, his expectation, his or her expectation on return on investment is definitely not in line with what a hospitality bred investor would want. So I was joking yesterday that we were showing IRRs of 12.5%, gestation of 8 years, and private investors think that's too low. So it's also the question of what demand can drive those numbers to be. So if you look at it as a business proposition, your definite outcome is tangible. Yep.
Very interesting. So you're speaking about market driving investment.
Yep.
Right? You have more people interested in the destination, and then the investors would come in and say, we're going to satisfy this demand. We have a number of brands with us, the Courtyard, Marriott is here, and Edina, and there's a Hilton coming. I think they signed an agreement a couple of days ago in Berlin. We have a few international brands. Most hotels in Bosnia and Herzegovina are independent brands.
Correct.
And is this an opportunity maybe to tie in with internationals, or is there no value? What do you think?
It's a huge opportunity. So if you look at it, and brands like Marriott, who's already existing here, Marriott is here, Accor is here, they would say that they bring a sense of standardization to experiences and product, which unfortunately for various reasons, a standalone hotel cannot do. There are multiple options today in terms of how a hotel can be operated through an international brand. You have the franchise model, and you also have a management model. But I think geographically, this space, because it's new to the brands, a franchise model gives you a standard operating procedure, and then it gives you specificity to experiences and product. So a customer knows what to expect when he comes into a Courtyard. He knows what to expect when he goes into an Accor hotel. Now, that's something that's missing. So it goes back to what Expedia and TripAdvisor were saying in terms of reviews. Now, when you go back to reviews, you would see that any branded establishment, because there is already a preset expectation, people know how to rate it or give feedback. Whereas a standalone establishment is always relative. It's a question of what was my experience at that particular moment, and that's how I respond to any feedback. So to answer you, Ibrahim, huge opportunity. And I remember speaking to you last, I think there are about 400, 450 hotels, and less than 2% is branded. I think it's a huge opportunity. It's the tip of the iceberg. It will also create those jobs that we were talking about. The jobs today that's going to the neighboring countries could be a huge huge attraction if the brands come in.
But is it worth the cost? Because also it costs to associate with others.
So it's also, again, going back to the chicken and the egg story. Demand brings in the necessity for the supply. And when the supply is standardized, it's also making sure that there is multiple facets to that demand. So you have repeat customers. Globally, if you look at it, repeat customers tend to spend more in the destination. So those are the parts that will contribute to the economy, which makes it affordable.
Yeah. Tony, in the last few weeks, we've been seeing great news coming from different global airlines. Turkish Airlines announced that they're buying 600 new aircrafts. Ryanair, 200. India, 470. What are they going to do with all these planes? And how can we take some of them here? Is this a full recovery already? And do we have the captains for them too? What's going on with the aviation sector, let's say?
Okay, so to put into context then, last year there were 3,500 new route announcements globally, okay? And this is in a year where we were still in recovery phase. So route development, I'm pleased to say, is not gone away. It's very much on an upward trajectory. Allied to that is the fact that the airlines have record numbers of aircraft on order. They also have new technologies that are opening up new markets. And this is great news, obviously, for destinations and countries who are trying to capitalize on that. The particular focus of the new aircraft orders in a European perspective is very much with the low-cost carriers, as you said, Ryanair, 300 airplanes, Wizz have got hundreds on order and so on. There is a danger in trying to sort of overcomplicate or overthink route development. It's a very simple process. The airlines are interested in the markets that you serve, or the market that you serves. And it's the first question out of their mouths when they attend events like Routes, which is part of my company's product portfolio. However, in respect of investment, the prize is enormous. If you can secure a new route to your destination, then you're looking at tens of millions of dollars in terms of the direct and indirect benefits to the destination or country in terms of revenue generation, opening up new trade links because you now have accessibility. Just as I digress slightly, my first impression, this is the first time I've been to the country and to Sarajevo. Two impressions. One, it's a difficult place to get to. All the flights are generally full, and uniquely for Europe, my journey involved 2 stops, which is not very common. So the other impression is that, yes, just visually, perceptively, it's got all the ingredients, all the hallmarks of being, and to some extent is, a successful destination. I think that there's two things going on. Despite all of this growth in the industry, I mean, effectively, Europe, I would say, is actually fully recovered. In fact, I think Sarajevo Airport was probably one of the first airports to exceed its 2019 traffic. Right. So it's well and truly back on track and exceeding. The issue, I think, is that post-COVID, 2 things have happened. The airline's decision-making process has shortened. So they're looking for opportunities here and now. To some extent, their strategies prior to COVID have, I wouldn't say been ripped up, but they are starting from a kind of a blank canvas. The other thing that is very apparent is the competition for the attentions of airlines has intensified. Every airport in Europe, every destination in Europe is trying to get the attentions of the airlines. So the big challenge for Bosnia-Herzegovina would be to how do you differentiate yourselves in a positive way that is going to make it a compelling case for the airline to fly here. And in marketing terms, it might be, can you find a category where you can be number one in? Whether it be ecotourism, whether it be cultural or historical, because as I said before, the first question an airline will ask you is not, how pretty is your airport, how accessible are your roads. They're going to say, what's the markets you serve? Is it year-round? Is it inbound? Is it outbound? Is it educational tourism? What's the level of industry in your country? Is it manufacturing? Is it financial services? And the reason they ask these questions is because all of these segments generate travel. Often business travel. I'm not saying people will pay business fares, but there's business purposes. So these are the really important drivers of an airline's decision making. Two things I think you need to do to realize this investment. Inevitably, we live in a world, in industry, any industry you look at, where incentives will be requested by the airlines. They know their value to you. They know their value to you as a supplier of capacity that's going to help generate business and tourism for you. So they will ask you for some money. And they know that, with respect, the country is great, it's got great potential, but you're competing with a lot of bigger destinations for that airline attention. So you're going to have to think very carefully about what are you prepared to invest, or what will it take to invest in enticing that airline to put their very valuable asset, which is what an aircraft is, into your market. I think the other thing that is very apparent, so we talk to airlines all the time. We gain a lot of insight. We run the Routes event, and we ask the airlines, what is it you're looking for from a destination about deciding on whether you're going to fly there or not? And they say, look, okay, there's a lot of things. It can be quite varied, but the one thing we as airlines say to, if you can tell your clients or the airports or the destinations one thing, we want to deal with a one-stop solution. We want to have a single point of contact who is empowered to make decisions about incentives and able to make things happen quickly, okay? Because airlines have shortened their decision-making time. Low-cost carrier said to me not so long ago, if we think there's an opportunity in the market, we can put the flight on within 3 weeks of having this conversation. Even the full-service carriers like KLM and Air France and BA, they've shortened their decision-making process to months, not years. So I think it's important that the collaboration, the stakeholders in a destination get together, because it's what the airlines are telling us to tell the destinations. That way you're going to be more successful than if you have a fragmented approach where an airline is dealing with multiple organizations who are not joined up. It will come across, it will lack credibility on behalf of the destination. So we need everybody pulling together because there's a common interest in making this happen. So hoteliers, governments, ground operators, restaurants, entertainment, everybody needs to come together and own this this project, which will be, you know, Project Bosnia or whatever you want to call it. But essentially, the barriers to entry are mitigated. So, freedom of the skies. What you don't want to do is get bogged down in renegotiating or negotiating air service agreements, because they are a barrier to entry for an airline. And an airline will look elsewhere, because there are plenty of places in the world where there are no barriers to entry. Visa policy is really important. Anything that frees up visitors' administration or entry, whether that be going to an embassy to get a visa, or, you know, in some countries I think it costs over $100 to get a visa. So if you're a family of visitors, you know, you're immediately looking at a $500 outlay just to get approval. So, look, I'm talking from a sort of a route development perspective. Try and minimize, make it as easy as possible for the airlines to make the decision to fly to your destination.
Very good. So visa facilitation is one. It's quite interesting. And I know many in the audience have been speaking to the government about easing the visa process. There is a bit of work to be done still in that area. You're speaking about freedom of the skies. I want to get to some of the other speakers. If anybody has a question, get ready. Just as I invited you earlier, and let us know. We'll get you a microphone. And second, it's illuminating to hear you speak about providing airlines with a holistic view of the destination, not only the tourism part. Because oftentimes you go to an airline and say, look at our tourism sector, how wonderful it is. And, but now you're saying, no, talk about industry, talk about trade, talk about banking, talk about all of the other sectors for which people will fly anyways. Because at the end of the day, the airline doesn't care why you're coming, just the fact that you're coming. So they're looking at how many buns and seats, how many seats are full. And we're speaking about also diversifying arrivals in terms of the year-round, making sure that you have demand consistent across the year. And you also spoke about incentives. So these are the 3 or 4 key issues that you spoke about. Speaking of incentives, now let me go back to Shaji. When you were at Ras Al Khaimah in the UAE, you succeeded in getting a number of airlines to come in, and you had a bit of an incentive for them. Describe how that went. Was it just a cash incentive, or you had other non-cash incentives, or what did you do?
So these were charter operations where the first requisite that they would have is to underwrite the risk. So we were discussing this morning, usually 189 seats, and if they don't sell X number of seats, who takes that risk? Now, Ras Al Khaimah, we came up with a different model where we said, let's not underwrite the risk, but increase the demand. So we said, for every dollar that the destination puts, so we put $1 for that source market, we expected the airline and the ecosystem there to put in $1. And then we came up with an absolute cash where we promoted the destination. Nobody retained it. So just to give you an indication, from Poland, we had TUI and Ithaca, who fed into 5 flights from Warsaw, Poznan, and Katowice, and we were operating at a load factor of about 96%.
Oh, wow.
And this is across summer. And from Czech Republic, we were operating at 99%.
Amazing.
So what we did was we kind of thought out of the box. We said the destination is not popular. So what we could do is go back to the, it's kind of going back to B2B. So we went back to the source markets, which we had identified through insights, and then went and told these airlines and the tour operators there that we will increase demand, we will increase the popularity of the destination, and then we will fill those seats. So I have to share this anecdote because we were talking about trade exhibitions. Every time I go for, let's say, a WTM or an ITB, when the immigration stops me and they ask me, what brings you to Germany or what brings you to London? And I always say, I've come here to attend WTM, and I work for the government of Ras Al Khaimah. And they would ask me, Russell who? So I think in 2018, I was there for FESPO in Zurich, and I answered the same. And I said, I work for the government of Ras Al Khaimah. And he said, you have lovely beaches. And I said, my job is done. So I think that's pretty much what it was that we did, B2B, going back to the first panel. We identified those markets, went to them, because interestingly, okay, this is probably where I kind of have an overlap with what Tony said. Warsaw had a daily flight with Emirates, and 30% of that load also came to Ras Al Khaimah. And in spite of that, we had 5 flights from 3 different destinations. So it was absolute top dollar that was put in promoting the destination in Poland. So to give you comparable numbers, while Dubai is humongous in B2C, the number of Polish guests that came in absolute numbers to Ras Al Khaimah far exceeded the ones going to Dubai. And that's only because of this.
I want to close out a bit of the air aviation discussions. We're talking about 2 kinds of air routes here. When you speak about charters, with charters, the deal is made with the tour operators. Yep. They made with the tour operators, they go out, they secure the travelers, put them on a plane. The plane effectively acts as a bus. You just rent a bus and bring them in. But what Tony is speaking about is scheduled routes. And both are important, because at the end of the day, that's what fills hotel rooms. But the scheduled routes are more predictable, and they give confidence to the destination. It enables people to go on such platforms as TripAdvisor and Expedia and otherwise to research a destination and be able to book and predict ahead of time that I can get to the destination. The good news is that we're all suffering coming here because seats are full. So I'd say that's good news because already there is demand for the destination. The question is, how do you diversify the aviation routes that are coming in, and how do we convince airlines coming? And both of you spoke about the power of incentives. And going back to Tony, I would ask you this question. I hope you have an answer for us. To demystify this incentive program, Bosnia and Herzegovina, as rich as it is, maybe doesn't have the amount of cash to outlay to give airlines cash contributions. Are there other creative ways of giving incentives that may not always be monetary? And even when there is monetary incentive, is it just de-risking a plane, saying we will give you this much money in order to fly? Or could it be co-marketing that we benefit from? So we give the airline and say, let's co-market with you. And or also going back to freedoms, would giving 5th freedom, 7th freedom, and we can even explain to the audience what those are, helps airlines benefit from traffic over here, let's say, as not just as a destination back and forth, but also using it as a springboard to other areas. What do you think?
Yeah, so the short answer is, if you're dealing with a low-cost carrier, such as Wizz Air, Ryanair, EasyJet, then the main driver of their decision-making is going to be, let's call it cash incentive, a per-passenger incentive, which you need to think very carefully about, because what you don't want to do is essentially give away revenue that you haven't got, because that's not a sustainable position. But there are, even with the low-cost carriers, there are creative ways in which you can help them. One of the basic ways, and call it creative if you want, is these airline network planners, they're really busy. They will know very little about your market. And you probably shouldn't expect them to do, because they're operating big networks. So in simple terms is build a business case that demonstrates what the market is here, try and quantify it. How many hotel rooms are there? What's the hotel stock? What's the average hotel price? Airlines have said to me, said to airports in the past, how much does it cost to go out for dinner in your destination? How much is a pint of beer? Or, you know, how much is X? Because what they are trying to do is build up a picture in their mind of what is this destination about. And these are things that you can do easily. You have the data. You know how many manufacturing companies are based here, all sorts of things. So it's not so much creative, it's just educating and understanding the perceptions that an airline has about the destination and trying to mitigate those.
Thank you. Let's continue on the theme of sustainable tourism. And you cannot be a sustainable destination without half of the population being gainfully engaged and taking even leadership roles in this. And Radna, you've done lots of work on the global front about the role of women in tourism. Not just the role of women in tourism, but even in leading sectors. Assistant Minister is with us today. The Minister is a woman. Many of the general managers of hotel here in Bosnia and Herzegovina are women. Many of the entrepreneurs are women. So it's great. But what can we know about the global scene and even what the destination here either needs to do or at least needs to communicate, because it's already doing well in this front?
Ibrahim, sorry, we have 5 more minutes. Yeah, thank you.
I'm going to link this. With what you said, using the power and potential of tourism to really create transformation at scale. And I'm going to link it with what Christian said, which is about impact investments. And I'm also going to link it with a gentleman who I thought had a fantastic question in terms of how do we make sure the impact is coming onto the people on the ground. Now, if you look at impact investments, if you look at ESG investments, they work because it mitigates risks. Investors are looking for responsible, sustainable investments, which they believe generates returns, but is actually causing a transformational impact to a lot of people at scale. Now, what is common to all of these things? Tourism is common to all of these things, right? Because we as a sector have the potential to really impact on E, S, and G components of ESG investments. And if it is diversity, equity, and inclusion-led, even more better. I mean, look at Bosnia and Herzegovina. From an E perspective, more than 50% of your landmass is under forest. It's biodiversity. It's rich in nature. When it comes to the S part of ESG investments or impact investments, that's where we have the maximum potential, because we can really affect people on the ground with reducing unemployment of the youth, with education, with empowering and financing small, medium, micro enterprises, which is 85% of our sector. Now, back to the question on women, that is a critical component of everything, because even when you're looking at S part of ESG investments, if you add a lens of gender on top, you realize how important it is to have women front and center, not just in leadership, but with everything. Without women, we can't have full financial inclusion. Without women, we can't have optimal learning outcomes, so education. Without women, we can't have optimal health outcomes. You need healthy women to make healthy babies, right?
Tell us about the findings of your study.
I love this audience.
Okay,
Thank
continue.
you. Thank you. So just to finish off on the women's front and central, what we did is we looked at all of the publicly listed companies in travel, tourism, and hospitality globally. Now, these are 300 plus companies, a market cap of trillions of dollars, and they employ millions globally. And unfortunately, what we found is with every rung of the career women climb in the corporate ladder, they step off the ladder. So we start with specific to hotels, resorts, entertainment companies, so hospitality, let's say. We start with 50% women in the workforce, which is amazing, which is actually more than the economy, because it only employs 39%, right? So it's a 1:1. But by the time they get to mid-management, it falls to 42%. By the time they're at senior management or an SVP level, it's 33%. We have only 1 woman out of 5, which is 20% in the C-suite or the ExCom. And here's the fun part. Only 7% of all CEOs and chairs in hospitality are women.
Oh, wow.
So we are
Only 7%.
Exactly. So the women drop off as they go up in the career ladder, which I think is a big problem for us.
So we're doing better in Bosnia and Herzegovina.
Are we?
We're doing better in Bosnia and Herzegovina.
With the CEOs?
With the women, yeah. Some hotel owners are women. So we have a great story to tell. You know, we're thinking about country brand and positioning, and Slovenia went green, Slovenia green. What do we do? And Bosnia and Herzegovina is a heart-shaped country, if you look at the map. And we say we do tourism with a heart. And that's why USAID Tourism Program launched 2 initiatives, one on gender, and including more women and empowering them in the sector. And second is on disability inclusion.
Yes.
And because that's, again, we do tourism with a heart. And that goes back to the issue of impact and sustainability and just doing the right thing.
Can I make a quick comment on this?
Sure.
I think we have to be a bit more creative and innovative than naming tourism with body parts. Heart of Europe is a place in Dubai. Soul of Europe is a not-for-profit in Brussels. I mean, at some point, Vilnius was marketing itself as, I don't want to say what, but it was controversial. And we have body parts, which are cities in the world, like there's Maine, there is Cologne, there is Beck-Bottom in Cumbria. I mean, for God's sake, we can do better as travel, tourism, and hospitality, can't we?
Well, I think
Great.
there's about 6 hearts in Europe. My last.
Yeah, we're the real one here. It's, what a wonderful panel, huh? I would have to say also in conclusion, I know the project, USA Tourism, working with the ministry and everybody else, is planning on a Women in Tourism conference later in the year, and we hope that you will come back. And because Women in Tourism doesn't work alone without men supporting as well, so we would like some of the gentlemen to come back and show their support. But this is one of many different initiatives, but under the overall theme is called Tourism for All. And so I would say congratulations to the team. Thank you all for being with us. Join us right after lunch for the reception with the speakers.
Please, I would call the participants from the panel previous to join for a
Let's
group
do the photo with the
Before
group
you all
here.
leave to lunch. Yeah, thank you, Ibrahim, very much. Yeah, we will just call the photographers for a joint photo.